All right, good afternoon, everyone. My name's Kevin O'Halloran, and I'm a research analyst at BMO, based out of Toronto, and covering the precious metals sector. Our next speaker today is Equinox Gold. Equinox is a Canadian mining company with 7 producing mines in the Americas, and the company is advancing its flagship 60% owned Greenstone project in Ontario, with first production expected in the first half of 2024. Our presenter today is the President and CEO of Equinox Gold, Greg Smith.
Thanks, Kevin, and thanks everyone for attending this presentation today, and thanks BMO for having us once again. Before I jump in, I will be making forward-looking statements, and this language is available on our website and also on the conference website in our presentation deck. So just very quickly going back in time, a quick history of Equinox Gold. We formed this company in very late 2017, At that time, Ross Beatty became our chairman and our largest individual shareholder, and we started to execute on a strategy to build a meaningful intermediate gold producer as quickly as we could to take advantage of what we saw as increasing gold prices. So in 2018, we had no production initially. We completed the acquisition of our Mesquite mine later that year. That gave us our very first production and our first income statement, I guess, for the company. And then in 2019, we brought our Aurizona gold mine into production. That became our second producing mine. And then in 2020, we completed a large acquisition, which was of Lee Gold Mining. That gave us a portfolio of mines in Brazil, and then also the large Los Filos mine in Mexico. In 2021, we completed the acquisition of Premier Gold Mines. We, in that acquisition, got a small mine, some exploration projects, and most importantly, our interest in the Greenstone Gold Project in Ontario. Since then, over 2022, 2023, we've been really focused on executing the build at Greenstone. We also brought our Santa Luz mine into production. We brought our Castle Mountain mine into production. Over that period, we also created a couple of companies, i-80 Gold, Solaris Resources, Sandbox Royalties. Last year, we did 565,000 ounces. This year in 2024, at the midpoint of our guidance, we'll be at over 700,000 ounces of production. So today, Equinox has 7 producing mines, with Greenstone mine coming online soon. That'll be 8 producing mines. We have a reserve base of 17 million ounces, another 16 million ounces in M&I resources. And our goal, and within our current portfolio, we've got the potential through organic growth to bring our annual production toward 1 million ounces per year. Our mines are located in 4 different countries right now: Brazil, Mexico, the United States, and Canada. So 2024, as I mentioned, total guidance of over 700,000 ounces of production at the midpoint. Right now, in this year, our production will come from 4 primary sources. One is the Los Filos mine in Mexico, the Aurizona mine in Brazil, which is our largest mine in Brazil, the Baya Complex, and this is a combination of our Santa Luz and Fazenda mines. We're working on a more formal integration of those 2 projects because they're so close, but collectively we call that the Baya Complex. And then in the back half of the year, our Greenstone gold mine will come into production as well. We also have the Mesquite mine, the RDM mine, and our Castle Mountain mine, and that's what drives our total production for the year. So of course, our primary focus over the last 2.5 years has been the construction of our Greenstone gold mine in Ontario. And just as a reminder, we initially acquired 50% of Greenstone. We then acquired 10% more. That brought us to 60. Our joint venture partner that holds the other 40% is Orion Mine Finance. Needless to say, this is a very important project for Equinox Gold. This is a mine of substantial scale. The first 5 years, it'll produce over 400,000 ounces of gold per year. It's got a 5.5 million ounce reserve that underpins a 14-year mine life, and we're seeing expansion beyond that. There's another, actually an MI and I, another 4.5 million ounces in open pit and underground resources that eventually could be built into a mine plan as well. When in production, Greenstone will become our largest and longest life mine and also our lowest cost producer. Globally, it's also an important mine. Greenstone will be one of the largest open pit mines in Canada, also the highest grade open pit mine of scale in Canada. And Greenstone is one of a very few projects of this scale globally that's in production or coming into production that's not already held by a major or by a private mining company. Again, when you compare Greenstone to all the mines globally in terms of cost, life of mine, all-in sustaining costs at Greenstone will be sub $1,000 an ounce. That puts us well into the lowest quartile of all-in sustaining costs for gold mines globally. So where are we today? We just announced our year-end financials last week, so we gave a bit of an update then. Things are moving quite quickly. The mine was substantially complete construction by the end of last year. Tailings facility was complete and turned over to operations. Mining was ramping up. Everything in terms of the installation was in place. We're now very focused on commissioning. The crushing circuit has been hot commissioned. We've turned on the crushers. We've started to accumulate crushed ore in the dome. The ball mills are starting with wet commissioning, with hot commissioning coming soon. Mining has been ramping up. We're at 90,000 tons per day now, and we've got all the permits that we need to start production. You can see here just some pictures of the crushing circuit. As I said, we've been actively crushing material. It's fully commissioned and ready to go. And that's the primary, secondary, all the way into the crushed ore stockpile. And here you can see the high-pressure grinding rolls and the mill. So high-pressure grinding rolls signed off by the vendor, ready to receive material. We've run them. We just haven't put anything through yet because we're waiting for the final tests on the mills to start receiving material. We're also working on the programming for the entire processing circuit. The tanks have been hydro tested. Ball mill 1's been load tested. So we're getting very, very close to production here. Frankly, I was hoping by the time we got to this conference, we'd be in a position to announce first gold pour. We didn't quite make it, but we've got first gold pour in sight, and we'll start pushing material through the circuit quite quickly, and we'll make our target of first gold pour in the first half of this year. Over the course of the year, we'll start ramping up production through the second quarter and into Q3, working to achieve commercial production in Q3. That's at around 80% of capacity. By year end, we'll be at 95% capacity, and we'll have increased our mining rate to 180,000 tons per day with the full fleet on site. So we've talked a lot about construction at Greenstone. We're just now starting to talk about the upside. We have not done a whole lot of exploration on site while we've been focused on construction, but some of the work we have done has indicated mine life extension in the eastern end of the pit near surface, in the west end of the pit, which is just pulling the pit further to the west generally. That easily is going to add a few years already. We also have a very large underground endowment at Greenstone, 4.5 million ounces, never been included in an economic analysis that's been public. So that's another area that we're going to start to work on as this mine comes into production and start to surface that value and see how that will contribute to the mine life over time. The other growth opportunity near term is that the mill has been sized, the whole processing circuit has been sized for 30,000 tons per day. Our mine plan is 27,000 tons per day. We have the fleet to increase our capacity, and we've got the capacity within the mill. So we'll look at what it looks like to increase our throughput, and that'll start to manifest as we bring this mine into production and get our arms around operating it, and then we can look to increase production just through increasing throughput through the mill. Our Aurizona mine in Brazil, later this year in the late third quarter, fourth quarter, we're going to be opening up a new open pit at Aurizona. This is our Tatajuba open pit, which is another 4 kilometers of strike along the same trend as our existing Piaba open pit. We also are permitted and will start construction of a portal and decline in our existing pit, the Piaba pit, to get underground at Aurizona, get our hands on that ore body, start to do some underground drilling, some bulk sampling, and organically start to build out an underground mine at Aurizona. Together, that could increase annual production at Aurizona to about 140,000 ounces a year through increasing the average head grade in the plant and then, of course, extending the mine life. At Castle Mountain, We're currently operating Castle Mountain as a very small phase 1 project while we work through permitting and engineering of a large expansion that we call phase 2. That would take production to 200,000 ounces of gold per year at Castle Mountain. We recently have firmed up our timing on permitting, our expected timing on permitting. We now believe that we will have a notice of completion from the BLM very near term. That's the Bureau of Land Management. Then the notice of intent shortly thereafter. That would put our permitting process into 2026. So around mid-2026, we should be in a position to make some sort of decision on advancing Castle Mountain. In the meantime, we're working on the engineering. We want to get Castle Mountain to a point very similar to Greenstone, where we have a very high degree of confidence in what we're going to build. We've gone a long way down the path on detailed engineering. And then finally, our Los Filos mine. Los Filos is currently operating as an open pit and underground heap leach only operation. And as the mine has advanced, we've got a number of deposits on site that are higher grade underground deposits, deeper in the pit, and that ore requires a mill to really surface the value from that deposit long term. We put out a feasibility study in 2022 on the addition of a mill, 10,000 tons per day. We have been working with the local communities in Filos, or at Los Filos, to try to get to a point where we've got good long-term community agreements with them that will allow for an economic environment and an investment environment that would allow us to make that investment at Los Filos. So in the meantime, it's operating as a heap leach. We want to get those contracts renegotiated, and then we can start looking at what that expansion would look like longer term. But collectively, including Greenstone, that's over 580,000 ounces of potential growth. That's more than we produced all of 2023. You know, I show this slide every time. Again, it's one of the slides that really indicates the value opportunity at Equinox. We've got one of the highest reserve bases of our peer group. We have one of the highest growth profiles of our peer group. We're still trading at the low end of our NAV per share to our peer group. And I think, in our view, as we bring Greenstone into production here through 2024, we increase not only our production, but we decrease our average cost, increasing our cash flow, moving a lot of our NAV into a producing asset in Canada, being in a position to deleverage over time with substantial increase in our cash flow and a big reduction in CapEx. We think that that should help to start move us up this value curve that you see here. And we're in a good financial position to bring Greenstone into production. We finished the year with $192 million in cash, $165 million available on our revolving credit facility. In addition to that, we have a $100 million accordion feature to our credit facility if we needed to tap that. We have an equity portfolio worth $100 million, and so good shape in terms of our cash resources to bring Greenstone into production. We also did do some risk mitigation in the first half of this year, put about 50% of our ounces or of our production subject to no-cost collar hedging. So a floor of 1970 and a ceiling of 2170. So we're in good shape in terms of mitigating any kind of changes in the gold price while we bring Greenstone to commercial production. As we've grown the company, we've substantially grown, I guess, the reporting of ESG along the way. All I'll say is we've had a very good track record over the years of improving our safety metrics, improving our environmental metrics. You know, in general, it's been very good to see an increase of over 25 or 28% in our ESG scores that are reported by third parties. So we're making good progress. We've issued a lot of reports in the last couple of years: water stewardship, tailings, climate change, big comprehensive ESG report. And as we've been increasing our reporting, we're starting to see that manifest in better scores, and we're going to keep doing that. And at Equinox, we're very aligned with our investors. Ross Beatty, who's our chairman, is also our largest individual shareholder at over 8% of the company. All of us that are on the management team are shareholders of the company. Many of our employees are part of a share purchase program. So we feel very aligned with our shareholders, trying to create value on a per share basis. If you look against all of our peers, we're second only to Endeavour Mining. Otherwise, we've got the highest insider ownership of any mid-tier gold company. So looking to 2024, the word transformative is used a lot, but really this is a year that will be transformative for Equinox Gold. As we bring Greenstone into production, significantly increasing our production, we think we're going to be doing that into a macro environment, ultimately of decreasing interest rates and increasing gold prices. At the same time, our capital burn is going way down as Greenstone enters commercial production. So our ability to generate substantial cash flow from our portfolio is increasing as we go through 2024, and that gives us a lot of optionality in 2025, reduce our leverage, and then look toward the future in investing in some of our organic growth opportunities. So that's the big catalyst this year, getting Greenstone into production, and Equinox basically shifts from consuming cash over the last 2.5 years to generating cash and then moving forward as a intermediate cash flow generating company. I think I'll conclude there, Kevin, and do you want to do some Q&A?
Yeah.
All right.
Feel free to come join
I'll come and join you.
And for those in the audience, if you have questions, feel free to just put up your hand and we'll get a microphone over to you. And you can also submit questions on the app. But maybe I'll kick it off. Can you speak a little bit about the steps you've taken throughout the design and the construction of Greenstone to de-risk the delivery of the project to date?
Sure. So when we acquired Greenstone, there was a fairly senior team already in place that had been there for a number of years. They had worked together for a number of years. Many of them had been with Agnico Eagle prior to Greenstone. And it was their baby, and they were very vested in the success of the project. So while we were going through that whole process of looking to acquire it and move it forward, they just continued to advance detailed engineering, to advance geotechnical drilling in the area of the tailings facility and the plant in particular. And so even before we had closed the transaction, they were thinking ahead. We had to allocate a certain amount of capital for them to do pre-construction activities that had to be done in season to meet the timeline. Us and Orion both agreed to that. And then we had to go through our due diligence sort of post-transaction to make sure we were prepared to start that construction program. And I'm sure it was very frustrating for them. But by the time we actually broke ground at Greenstone, they had gotten detailed engineering to 85%. We had pre-ordered a lot of the long lead items. We had redone the budget entirely. We had a third party come and validate it. And we had hired G Mining and kind of built out a full org chart for executing on that project. And so I think that the build was really successful because of the level of planning and time and attention that went into preparedness to start that in the first place. And that's everything from even just controls around purchasing and procurement and kind of everything that goes into a full team for construction.
And maybe just on cost inflation, can you speak a bit about how you've managed costs across the portfolio, especially given recent strength in both the Mexican and the Brazilian currencies? Sure.
So, 2022, we saw a pretty substantial increase in input costs throughout all the countries we're operating in. And that applied to everything from diesel to cyanide to explosives to mill steel, basically everything. A little lagging behind that, suddenly came labor, which was a reaction, around the world to inflation. And we've seen that ease. We've seen the input costs start to ease a little bit. Labor's a lot stickier. But what we did specifically is we implemented a foreign currency hedging program at head office. We've always done a little bit, but we took more aggressive action, I guess, in the last couple of years. 2023, we actually had a realized foreign exchange gain that we booked in Vancouver that isn't reflected in our costs. And had it been, we would have been well under $1,300 cash costs. So it was very effective. We're doing that again in 2024 to make sure we meet our budgeted FX rates. But it doesn't matter. They're still getting strong. Peso and the real were some of the best performing currencies against the US dollar in the last couple of years. And then on the operating side, what we did is we hired some very skilled people and put together a continuous improvement program, and we call it an asset optimization program. And their entire focus is to find efficiencies, to find cost savings, to find ways we can leverage our buying power, all looking to reduce our overall operating costs. And in 2023, they were very, very effective. We identified over $50 million of potential savings. We realized on a lot of that in 2023 and rolled it into 2024. And now we're working just to institutionalize that throughout the organization, recognizing that we've grown fast and there was some low-hanging fruit that we were able to capture pretty quickly. It's going to get harder, but just making really responsible consideration around CapEx, around any kind of expenditures in the company, and before we make them, and also looking to see ways where we can use our negotiating power to reduce costs over time. So it's definitely a big focus for us, and I think will continue to be so. And then hopefully over time it just becomes part of the DNA of the company, and we really sort of have a very strong cost-focused culture. That's the goal.
And maybe related to that, can you speak a bit about the steps you've taken to de-risk the balance sheet recently, and your expectations on delevering once Greenstone is in production?
Sure. So if you again, you kind of look back to late 2022, the gold price had really come down to $1,600. Inflation was starting to run. We were in the middle of a fairly large build. So we had to take some action to make sure we were fully financed through the build of Greenstone. We did that primarily through tapping our revolving credit facility. We did some gold prepays over the construction period. We put in some costless collars for hedging just to make sure we could weather any volatility in the gold price. We did put an ATM in place and at-the-market financing, and we tapped that kind of where and when we thought it would be needed. And then we also just worked to maximize cash flow from our operations. And we've gotten through the bulk of that build, which in US dollars, $750 million build. Using very little equity. We've been able to do it mostly from cash flow and from debt. One thing we did do in September of 2023 is we issued another convertible note. We did that very specifically to make sure we had the cash on hand to pay down a maturing convertible note this April. And the terms on the new note are much better than the terms of the old note. The market did not cheer us on when we did that issue, but I think it was the right thing to do, and now we're well capitalized to deal with that maturing note and get Greenstone into production.
And maybe just switching gears a little bit on exploration across the portfolio, there's a lot of opportunity there. What excites you the most in terms of growth through the drill bit?
I mean, getting underground at Aurizona is going to be really interesting, I think, for us. It's a very consistent deposit, and it plunges well below the open pit, and we've hit it from surface many times. And I think getting underground and getting our hands on that ore body and doing some drilling and sampling underground is going to be very informative, and I think is going to indicate the potential for a fairly long life underground mine there. The one slide that wasn't in here that I thought was in here was actually an overview of the full land package at Greenstone. And this is an area that we've done very little exploration on since we bought the project. We've been totally focused on deploying capital into the build. But there are near pit deposits around Greenstone. There's Cayley and Key Lake in particular. Between the two of those, there's already 700,000 ounces of MI&I. There's also the Brookbank deposit, which is another 700,000 ounces of MI&I, and there's a whole bunch of different targets between Greenstone, Brookbank, and then even farther west. And we've got about 100 kilometers of strike along this belt. And so there's lots of targets there. There's lots of interesting work we can do in that region, but specifically near Greenstone, developing some of those near pit satellite deposits and also starting to advance the underground is something that I think can add a tremendous amount of value to that mine life over time, right? So that's an area that has been underexplored. We haven't really done anything since we've owned it. I think we're all keen to get on it and get exploring. It just wasn't a focus for us while we were building the mine.
And on ESG, you touched a little bit about it in the presentation, but can you take us through some of the initiatives you guys have, and maybe in particular your partnership with the local stakeholders at Greenstone?
Yeah, I mean, ESG is always something that all responsible Canadian mining companies do. You need to be on top of that in the local areas where you operate, and of course with the local governments generally, and our stakeholders expect it, our shareholders expect it. I think where Equinox is improving substantially is around reporting and collecting the data around all the things that we do and making sure that gets into the public discourse and disclosure, and then that helps increase our relative ranking. So that's been a big focus over the last couple of years, is getting our reporting up to standard. Greenstone in particular is a really awesome site from that perspective, because when we bought it, one of the boxes we needed to tick is what do the local communities think about this mine? And there's a number of First Nations communities in the area. There's also the general municipality of Greenstone. So it's a mine that's in an area of population, right? There's a lot of people there. And the general, overwhelming opinion of the local community is that this mine is fantastic for the area. The First Nations, we have impact and benefits agreement with all the people within our area of influence. They're very, very keen on the mine. We're trying to make sure that we have as many of the First Nations people working at the mine as we can. The federal government kicked in some money for training, and so we've been working in connection with the First Nations to ensure we get people trained up. And I think today we're at around 32% plus of people that have self-identified as Indigenous at Greenstone. So it's a really, it's an awesome mine to go to from that perspective. There's a really good community feel around it. And there's things in the community that we're going to continue to support, including the local hospital and other projects in the region. But again, we're sort of just getting started at Greenstone, and some of those benefits will start to manifest over time. But it's a really great mine to go to, certainly from local government and community support.
Great, and we're getting short on time here, but maybe one last question from me. You mentioned in the presentation how you view Santa Luz and Fazenda as kind of one complex as opposed to two separate mines. Can you tell us a little bit about the synergies between those two?
Sure. So geographically, they're about 50 kilometers apart as the crow flies. We've staked all the land between them. And then corporately, and certainly within Brazil, we've started to look at how we can run those assets together sort of administratively, from supply chain, from sharing technical talent across both of those deposits. We also have an exploration program that kind of links the two of them together. So it's a bit of a weird complex because you're always going to have kind of a northern and a southern processing area, but there's good potential between the two of them. There's also some pretty meaningful corporate and tax advantages that can come from merging them together. And because it's a big district, it kind of makes sense to look at it as one. We would never sell one and not the other, so putting them together, you have a much higher production profile. I think we can reduce the costs, and we can certainly make the whole reporting corporate tax more efficient. So that's the plan around the Baya Complex.
Great. Well, that takes us to the end of our time slot. Thanks a lot, Greg.
Kevin, appreciate it.